I'm Caroline Hyde in London. This is Bloomberg Technology. Coming up, the Manchester terror attack brings the battle over encryption back front and centre. We'll examine tech's role and responsibility limiting the spread of terror through social media. Plus, a Snapchat snapshot on the startup's potential future. Why Muddy Waters founder Carson Block says Snap may be a short. And SoftBank's $4 billion bet on Nvidia. We'll dig into the investment by the world's biggest tech fund and the chipmaker's successful entry into the automotive markets. But first, let's get some fresh news straight out of Washington. The Congressional Budget Office is just out declaring Republicans' revised plan to repeal and replace parts of the Affordable Care Act. Now, it will reportedly reduce the federal deficit over the next 10 years by $119 billion. Now, that's $32 billion less than an earlier version of the legislation, according to the CBO. Let's head to the White House now with BN reporter, Bloomberg News reporter Shannon Pettypiece. Shannon, talk us through, remind us how this particular legislation sort of undoing Obamacare was different from the original.
Right. And people may remember who've been following this closely that we did have a Congressional Budget Office report for a previous bill. Then there were some amendments made to those. The most significant amendment was that it would allow states to opt out of having to provide certain essential benefits and change the way that they charge people premiums. And so with that change, as you mentioned, it still has a $119 billion reduction to the deficit, but that's $32 billion less than an earlier version. And it would leave 23 million people are expected to lose their health insurance under this plan by 2026. And that would be about 1 million fewer than that previous bill. They also mentioned in this report that these changes to the amendment made would actually destabilize the insurance market in some places by allowing these waivers and allowing states to opt out of these certain benefits, and what it would do to destabilize the market. And so that about a sixth of people, I think the population could be living in places where the market would actually become more destabilized, which is already an issue that Republicans have been talking about currently, about the concerns about stability in the insurance market.
I mean, this is quite shocking, to be destabilizing an insurance market, to be leaving 23 million stranded without insurance coverage in 10 years. How does this bode for the political process going forward, for it getting ratification through the rest of the houses?
I think everybody in Congress and the House knew that this bill was going to leave millions of people uninsured but would go to reducing the deficit. The Senate is not willing to let this many people go uninsured. That's one of the issues that they have been grappling with, and trying to come up with a system where they don't have so many people losing insurance coverage. That's going to be difficult to do, though, because whatever the Senate comes up with and passes is going to have to go back through the House, and they're going to have to mesh those two together. Republicans, Paul Ryan, who is really the architect behind this bill, put out a statement basically, touting the benefits that this bill provides to reducing the deficit. As a fiscal conservative, that's something he is very concerned about, the deficit. And he also reiterated a point which he keeps repeating, that the Obamacare marketplaces are not sustainable. They're not working for people, and so they have to do something. But as the Republicans always leave out here, is that they have done everything they could to really destabilize the Obamacare markets in the early months here and cause insurers to want to pull out because of all the risk and uncertainty about getting payments, about what the system's going to look like a few years from now. So while there have been fundamental problems going on with the Obamacare marketplace, the Republicans have been exacerbating them, and now they use that as sort of a talking point for why then you need to agree to their plan.
The battle continues, I'm sure. Bloomberg's Shannon Pettypiece from the White House with all that analysis. Thank you very much indeed. Great reporting from the White House. Now, let's turn our attention back to technology now for you. Carson Block, the short seller, raises concerns about Snapchat's parent company. In an exclusive interview with Bloomberg's Eric Schatzker, he had this to say about Snap.
We're not short Snap at present. We might be short in the future.
Now, Block has three areas of concerns, including corporate governance issues, company ethics, and the strength of Snap's business model. Joining us from San Francisco is Bloomberg intelligence analyst Jitendra Warrell and Corey Johnson, Bloomberg TV editor-at-large. Gentlemen, it has been too long. Great to see you both. And let's kick it off, Corey. Carson Block, I'm looking actually at the Bloomberg function, short interest, SI Go on Snap. Yeah. And if you're looking at it, $35 million currently is the short interest out on Snap. That's 14% of the equity float. Now, that's much more than Facebook's 0.9%, but Twitter's got double that, 63 million we see in terms of short interest against Twitter. But let's face it, Carson Block wouldn't be the only one with a short interest out on this stock. What do you think to his views?
So I think that, first of all, the size of the short interest, 50% is a lot, but let's keep in mind the stock's come off quite a bit. So a lot of people might have been short the stock earlier, maybe have taken their money and run because they made some profits because the stock was massively overvalued. But I think that Carson's right to look at some sort of fundamental problems in the business model of Snap and some things that were looking like they were getting better leading to the IPO and allowed optimistic business analysts to look at the model and say, hey, things are getting better. Their first quarter out got worse, and that's really disconcerting. It's not just the user numbers. The user number growth has gotten really anemic since the introduction of the competition from Facebook, both in Instagram stories and the Facebook stories as well. But if you look at the user growth numbers, what you see is that the numbers just aren't growing that much anymore, that they had been growing into double digits. And those numbers now, we can pull up in the Bloomberg terminal, but we've got charts as well, 166 million users at the end of the last quarter. And while that was a 5% increase over the previous quarter, it had been growing, as I mentioned, at double-digit rates before the introduction of stories. And I think that there's a fundamental problem there with adding new users in the face of a bigger user base at Facebook and WhatsApp and so on.
But Jitendra, they talked up a lot that it wasn't about the amount of users they had, but it was the level of addiction, the level of use of this particular app. How does that fit into the story here?
Well, that's what the bulls are banking on. I mean, the engagement growth that's spurred by innovation, by these TV shows, exclusive content for millennials, because that part of audience is becoming harder to address. I mean, if you look at the TV viewership, it's been on a decline. So, their pitch is basically, look, this is an audience that's difficult to get. It's highly engaged. We have it on our platform, so we may be able to convert and convince advertisers longer term with that. But having said that, what Corey just mentioned about user growth, I mean, that is a big concern. So either they have to shift the investor focus to engagement, provide more engagement, better engagement metrics on a consistent basis so that at least investors can see if the story is playing out or not. So it's still a show me story.
Still a show me story, and also a show me story as to the addressable market. I mean, Corey, what's fascinating, BI, Bloomberg Intelligence, where Jitendra stems from, has done some great charts for us showing that actually, if you look at the age range that Snap really targets, you go worldwide, and they're really never going to become a 1 billion player here in the same way that Facebook is, and maybe once upon a time Twitter aimed to be. Tell us about how user growth and the story really differs from those two big players.
Yeah, I mean, the focus on young users, of course, limits the size of the audience, but they definitely have an engaged audience there. I think the real problem isn't necessarily the audience or even the size of the audience, but is the ability to monetize that. What we have this amazing thing with this company that has a sick valuation is negative margins, but not negative operating margins. In other words, some of their costs of doing things are added. The actual product itself, which should be really cheap to provide, costs more than the revenues they're taking in. The gross margins, they're losing money with every single sale, if you will. Just the gross margins are negative, and while those were getting better leading into the IPO, they got a lot worse afterwards. And it starts to suggest this company can't actually control their gross margin issues. There was some commentary in the IPO prospectus and in subsequent filings about the costs of what they're paying to Google for cloud hosting, or to Amazon for cloud hosting, the long-term contracts they have there. But if you look at those costs, you see those negative gross margins, it's disconcerting because it's very expensive to provide all those really valuable, bunny ears, snap filters and wagging tongues and rainbows. It's expensive stuff.
Expensive stuff, and we'll see whether that short position does actually become a reality with Carson Block. Guys, thank you very much indeed. Jitendra Wara of Bloomberg Intelligence, Corey Johnson, Bloomberg TV editor-at-large. As ever, great to have both of your insights. Now, a story we're watching for you. HP shares popping in extended trading as much as 9%. The company reported earnings that show accelerating sales momentum in the second quarter. Now, that's as printers and PCs delivered growth for the first time in half a decade. Revenue rose almost 7% to $12.5 billion, and its forecast third quarter profit that may exceed projections. Now coming up, automotive tech is the midst of a gold rush. That's as companies go all in on self-driving vehicles. And NVIDIA is now a standout in this crowded space. We'll hear from an NVIDIA exec. That's next. And Bloomberg Technology is live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. San Francisco, 10 p.m. right here in London. This is Bloomberg. Now, a Bloomberg scoop for you. SoftBank has amassed a $4 billion stake in NVIDIA, making it the fourth largest shareholder in the chipmaker. This, according to people familiar with the situation. Now, SoftBank just closed its $93 billion Vision Fund a few days ago, and at the time disclosed it owned an unspecified stake in California's NVIDIA. Meanwhile, the chipmaker's stock tripled last year and is up nearly 30% this year, giving the company a market value of a whopping $80 billion. And much of NVIDIA's gains are being driven by progress expanding into new markets, such as automotive. And in the last quarter, NVIDIA's revenue from that unit jumped 24% from the same period a year ago. But competition is growing from other tech giants and the automakers themselves. Danny Shapiro, NVIDIA's Senior Director of Automotive, joins us now from San Francisco. Wonderful to have you joining the show, Danny. Thank you. And talk to us. Revenue growth, 24%. This is an attractive part of the business. What about the partnerships? Because you just joined forces with Toyota. What do these sorts of partnerships bring to your bottom line?
Well, we've been working with many different automakers, the tier one suppliers, mapping companies, and many startups in this space. And in fact, creating a self-driving car is a very complex problem. So our technology, our hardware and our software is the foundation upon which many automakers and other partners are developing self-driving vehicles, cars, trucks, and shuttles.
So it is all about now the automotive, the autonomous vehicle, not just, before it seemed to be the infotainment of a car that you guys dined out on, but is this really going to be a driver of your revenue, of your profitability, is going to be autonomous driving?
Absolutely. I think what you're seeing over the years that we've been involved in automotive, which is over a decade now, is driving those touch screens in cars like the Tesla Model S and Model X and the Audis and Hondas. And so we bring a lot of computing horsepower into the vehicle, originally for graphics, but now to process all the information coming into the car. So an autonomous vehicle or semi-autonomous vehicle will have a lot of sensors coming in. So we're working with Volvo and Audi, Mercedes-Benz, Tesla, as well as the newly announced Toyota. So we're developing technology that's also being used by companies like Baidu in China for mapping. And so, in fact, the technology we've developed is enabling a whole new revolution in transportation. We're processing all the data coming in from cameras, from radar, from LiDAR. That all has to then be understood, much like a human would understand that information, but we're doing it inside an AI supercomputer.
I mean, what is amazing is, of course, the spectrum of companies you're working with, but also the competition is heating up. Mobileye bought by Intel. How much does that make this more crowded space? Does it make it a little bit hotter for you?
You know, this is a brand new industry, really. The whole self-driving space is wide open. We've been focused on taking supercomputing technology that we've developed that is today in the cloud. Our processors and our hardware and software are used by Google and Amazon and Facebook for really high-performance computing. And now we're taking that, we're bringing it into the car. Nobody else really has the technology, the hardware or the software from the auto industry to do this. So it's coming from outside, and then we're partnering with the automakers to bring this to market.
I think what's fascinating is also the simulations that you're doing. There's much spoken by Waymo, owned by Alphabet, about the miles that they've got out on the road of these self-driving vehicles. But a lot of car companies are now using you for simulating this sort of data. Can you tell us how it works and whether regulators are really going to like it?
I think they will. Basically, to train a car how to drive like a human, you need to give it a lot of data. And that comes in the form of video from cars driving around. Mapping data is used in this process. But the reality is, we need to simulate all these different possible scenarios of what could happen while cars are driving. So we're going to use a combination of actually driven miles, and then using deep learning, we're training these neural nets to understand how to react in potentially hazardous situations. So we don't always see hazards while we're driving, but we can simulate those hazards. So using our graphics technology, we can produce potentially dangerous scenarios. Kids walking in front of vehicles, somebody running a red light, somebody driving recklessly. All that can be done inside the computer, and we can iterate and we can simulate much faster than real time. So we can simulate millions and millions of miles of driving in just one day.
And Danny, therefore, Is your business ready and able and where it needs to be to take on this mammoth task? Have you got the talent in-house? Are you struggling to bring yet more in? And what about research and development and the like?
Great questions. And the reality is NVIDIA is an AI company. So whether it's in automotive or healthcare or even finance, our technology, our hardware, our software, our deep learning expertise is really revolutionizing all these different industries. So we have a lot of AI talent in-house. We're always hiring more. But what we're also doing is helping to train others. We run a deep learning institute. We're partnering with Udacity. We work with many universities who are changing their curriculum to train a whole new wave of engineers and data scientists who understand deep learning, understand artificial intelligence, and how the GPU, our graphics processing units, are really helping to revolutionize all these different industries.
Danny, we look forward to hearing how the revolution continues. Danny Shapiro, Senior Director of Automotive at NVIDIA, thank you for your time today. Now, coming up, the UK is on its highest level of alert in the wake of the terror attack in Manchester, and a potential conflict is brewing between tech giants and authorities who want to access encrypted data. We'll discuss that next. And a feature that I'd like to bring to your attention is our new interactive TV function. You can find it on TV Go on the Bloomberg. You can watch us live. If you miss an interview, you can go back to it, and you can send our producers a message. Play along with the charts we bring to your air. This is for Bloomberg subscribers only, though, I'm afraid. Check it out, TV Go. This is Bloomberg. Now, the US government has given an update on expanding its current laptop ban on flights. The Department of Homeland Security has, for the time being, decided not to widen a ban of laptops and other electronics used in airline cabins to flights leaving the US for other countries or on domestic legs. However, the agency has not made a decision about electronics on incoming flights from Europe. Meanwhile, the US airline travellers will face more scrutiny of electronics larger than mobile phones at about a dozen domestic airports. The TSA says passengers will be asked to send large electronics, including tablets, through X-ray screening separately from their carry-on bags. Now, the agency says its stepped-up screening may be extended nationwide. Meanwhile, there's continued fallout from the worst terror attack in the United Kingdom in more than a decade. The government has raised the terror threat level from severe to critical, its highest level. And ministers reportedly reinforced a demand to allow access to encrypted messages as part of its investigation, urging social media companies such as Facebook and Twitter to go after terror posts on their sites. Now, earlier we spoke with Bloomberg technology reporter Jeremy Khan about the next steps.
They've said two things. One is that they would like all of these social media companies to do a much better job of trying to police content on their site. So taking down posts from terrorists or terrorist sympathizers, those who would be encouraging extremism. They really want the social media companies to close down those accounts, to delete this content, to remove users who are repeatedly reposting jihadi content or any content that would be sort of praising these attacks. That's one thing. And the other thing is that the Home Secretary, Amber Rudd, has come out and said that she would like companies to end end-to-end encryption. So this is messaging services like WhatsApp that are encrypted the complete way across the communication chain so the government can't access them. What she has said is she would like these companies to be responsive in particular requests where they want access to this information, that government be given access. Now, the companies have always said they can't do this, but she's basically asking them to come up with a way where they can meet these requests.
This feels like deja vu almost. We think to the San Bernardino shooting, we think to the US and Apple really taking on the US government. What argument are we likely to hear from those who have end-to-end encryption, the owner of WhatsApp at Facebook, whether it might be Apple or indeed Twitter? What are we going to hear in response? Well,
I think what you'll hear them say is they themselves do not have access to this information. So in order to meet this request from Amber Rudd, they would have to build a back door. This is what you saw Tim Cook saying in the Apple case, is that what the FBI was asking for was a back door. And if they do that, they say, well, it's not just government that could use this. This could potentially fall into the hands of someone else, and you could end up with hackers having access to this. We just had this huge ransomware attack that used an exploit that the National Security Agency had come up with. I think you'll see some people, some of these social media companies say is, if we do this, you're opening up a can of worms. You're going to allow a criminal element to use this as well, potentially.
as yet, have we heard much of a response from the technology companies? I mean, obviously, they can likely highlight the efforts they've had to try and take down terrorist activity and these sorts of misuse of their social media outlets. But are they responding to the call for end-to-end encryption as well?
They haven't yet. We haven't seen them say very much today. We'll see if in the next few days they come out with statements. I think they very well may. Also, it depends, I think, how much Amber Rudd repeats this. If this becomes a talking point for her or for the government, I think you'll have to see a response from the tech companies.
That was some of my conversation with Bloomberg Technologies reporter Jeremy Kahn. Now, coming up, short seller Carson Block is raising concerns about Snapchat's parent company. We'll dig into his research on Snap. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Minority House Leader Nancy Pelosi called the new CBO score on the Obamacare replacement bill, quote, devastating, and says it points to potential consequences. That's after the Congressional Budget Office estimate showed as many as 23 million fewer people would be without health insurance by 2026. The CBO also says the bill will reduce the federal deficit over the next 10 years by $119 billion. The father and brother of Manchester suspected suicide bomber Salman Abedi have been arrested in Libya. The AP also reports a sixth person has been arrested in connection with Monday's deadly attack. Two suspected suicide bombers struck near a bus terminal in Indonesia's capital city today, killing at least 3 policemen. Officials say another 5 officers and 5 civilians are wounded. The officers had been guarding a local parade. Britain's political leaders will resume campaigning on Friday. Officials say Prime Minister Theresa May's Conservatives will resume full national campaigning on Friday. The opposition Labour Party will pursue a similar timetable. The election is on June 8th. Brazilian President Michel Temer is scrambling to suppress a revolt within his party. Party lawmakers are pushing for an official resignation in the wake of last week's graft accusations. According to a half-dozen Brazilian lawmakers, the surest path to removing Temer is to annul the 2014 election result. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. Wednesday here in Washington, already 7:30 Thursday morning in Sydney. We are joined by Bloomberg's Paul Allen. He has got a look at the markets. Paul, good morning to you.
Good morning, Elisa. Well, we see some more strength in ASX futures, pointing up about 0.2% right now. Keep an eye on the New Zealand dollar today as well. Stephen Joyce's first budget as finance minister is due to be handed down at about 2 o'clock local time. The surplus is expected to come in at a better than expected, close to $2 billion figure. And we can expect to see a fair bit of generosity too in the lead up to an election in New Zealand later this year. Elsewhere, Nikkei futures are looking a little weaker, traded out of Chicago. South Korea will make a rate decision today. That's due at 9 o'clock local time. Expected to see that rate on hold at 1.25% due to concerns over household debt. We're also expecting GDP for the first quarter out of Singapore. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde in London. And our top story this hour, Carson Block's research into the parent company of Snapchat. Now, the short seller does not currently have a position betting against the company, but he has areas of concern. Let's take a look at the Bloomberg. Type in G, hashtag BTV. You get to our charts, you type in 6944, and we bring you this chart for you. What I want to really be analysing is analyst target prices. What you'll see is currently the mean is currently the median. We're starting to see shares of Snapchat here in the yellow basically gather around the median price target of analysts at the moment, which is around about 22. I also like in this chart, though, the vast difference in viewpoints of these analysts. Check out the bottom red line. The lowest price target, just $9, when we're currently trading at about $20 per share. On the upside, well, some are looking pretty optimistic that we'll reach somewhere in the line of $31. So clearly huge disparity, but at the moment we are seeing a gathering around the median overall price target. So get into the G #BTV6944 to take a look. But now let's get for Eric Schatzker, Bloomberg, sat down with Carson Block and asked him, well, about his research into Snap. Have a listen.
We've done a decent amount of work on Snap, and as you said, we're not short Snap at present. We might be short in the future, but we have really three categories of concerns. So, corporate.
By the way, we should remind everybody that this is the owner of Snapchat.
Yes, exactly. So, we've got corporate governance concerns, and some of those are well known, but there are also, say, real questions about the ethics of the company, and that's something that's not well known. But also, and this is the area where we're really trying to form a view, questions about the business model and strategy, coupled with the fact that it effectively has a lot of debt in the form of commitments to Amazon Web Services and Google for cloud hosting.
Let's take them one by one.
Sure.
You say some of the corporate governance concerns are well known. Mm-hmm. They might be known to many people, but not all people. One thing some people who may own the stock or are looking at the stock may not know about is the fact that there are no voting rights in the shares.
Correct.
First company that I've ever seen that has no voting rights in its shares. Mm-hmm. On the surface, that strikes me as a corporate governance concern. Is that what chiefly concerns you, or is there more than that?
That's not the chief concern, but that's definitely a concern because the CEO, Evan Spiegel, he strikes me as one of the founders who you don't necessarily want around to run the mature company.
Why?
But, well, at this point, and this gets to the ethics concerns we have. So getting the other reasonably well-known corporate governance concern is that he got effectively an $800 million stock bonus on the IPO, few to no strings attached to it. So he can leave the company now, and he'll still receive that stock. And that's, partly to more than replace the almost 300 million he sold on the IPO. So that is really.
That's a red flag to you?
Yeah, you normally don't want to see that sort of conflict of interest or that just outright money grab. But beyond that, the actual ethics concerns, there was a whistleblower lawsuit that's been recently filed by a former employee who was hired to lead their growth team.
Came out of Facebook, if I recall.
Correct. And now he was hired in late 2015. He was only with the company for 3 weeks before he was fired. And in his lawsuit, he's alleging that at the time that Snap was telling investors and advertisers that they hit 100 million daily active users, it was really about 80. And there are other issues. At the time, they were apparently telling everybody that they were growing double digit month on month in terms of daily active users. And he said it was really quarterly, low to mid single digits, which is what we see now with their first quarter as a public company.
Okay, so let's say he's right and you're right to give him some credibility. Who's to say that Evan Spiegel, who's in his mid-20s, isn't going to, quote-unquote, grow out of this stuff, grow up, if you will, mm-hmm. and start running Snap like, the public company? Okay.
Well, one thing I do want to emphasize before answering that question, and that is a key question. We've actually diligenced the whistleblower here. His name is Anthony Pompliano. Mm-hmm. We've had one of our investigators do a lot of diligence, and everything that's come back indicates that he's a very stand-up guy, very serious, very honest.
He checks out.
Yeah, I mean, he at this point, I would say it's probable that what he is saying is correct. Now, in terms of that question of, well, can a zebra change its stripes? let's say Spiegel was problematic before, can he straighten out? I mean, here's the real problem I have with that. He's just been massively rewarded for, if Pompliano is correct, this unethical, problematic behavior. So people who are positively rewarded or positively sanctioned for that, I really don't see them all of a sudden having this moment where they say, you know what, that was great back then, but now's the time for me to really, toe the line and straighten my act out.
In other words, the incentives aren't lined up in the right direction.
Yeah, I mean, I think usually people like that have to have something really bad happen to them before they correct their behavior.
Well, a 26% drop in your stock price on the day of earnings is something bad. I'm not sure whether it's quite bad enough. Before we run out of time, let's get to the business model and strategy issues, because it sounds as though they might even be more important than the ethics and corporate governance issues.
Right, and this is, for us, we generally don't do a lot of forward-looking analysis, so this is for us the piece that we really want to work on more to come to a view. Now, there's this, so for people who are long
We know about some of this stuff, right? Everything Snapchat does, Facebook seems to replicate.
Right, but there are some important differences. Well, so one of the bull theses on Snap is that the younger generation, they think of Facebook as, we thought of Oldsmobile. We're not interested in it, and they're not going to go to Facebook. But the counterpoint to that, which I think is a very salient counterpoint, is that Snap is great when you're a teenager in high school and you have your cliques and you're trying to hide things from your parents. But as you get to college and you start thinking about applying for jobs, that's when you want to embrace the wider world. And Snap, with its focus on much tighter social networks as opposed to, say, the whole world like Facebook, is deliberately not well suited for that. And so the counterpoint to the bull thesis on Snap there is that today's teenagers will become tomorrow's prime, they will use Facebook as their primary social network going forward. So it's not that we see a real generational difference.
That was Carson Block, founder of Muddy Waters Capital, with Bloomberg's Eric Schatzker. Now, coming up, we dive into the European tech landscape, why one VC firm believes Europe is the most important international stop on the way to a tech IPO. That's next, and this is Bloomberg. Now, there are a lot of factors that US-based tech companies weigh before taking the IPO plunge. One top factor is deciphering a company's readiness, international expansion. Now, that's according to a new report out by Index Ventures. The report provided a guide to overseas expansion and found that at least 30% of revenue among top US public tech companies comes from international markets, usually led by Europe. Joining us now from San Francisco is Index Ventures partner Ilya Fushman. Ilya, it's a great piece of work. It's all about expanding into Europe. It seems to be a guide to US startups and how to really make their presence felt on this side of the Atlantic. But talk to us first about the data point here that US big tech companies have about 30% of their revenue internationally. How crucial is that?
Well, thanks for having me. It's a really interesting data point, and we find that it's pretty critical. It's a really good indicator that you've reached global scale or you're on your way to reaching global scale. It shows a diversity of business. It means your business has more customers that diversify the base. And it's frankly something we've empirically found across a number of companies. And really, it's kind of a lower threshold. We find that companies like Facebook or LinkedIn, when they went public, were even higher. Facebook was 44%, LinkedIn was 46%. So really seeing that 30% number should indicate to a company that they're about to hit global scale and they should expand. And Europe is the first destination they should go to.
I mean, what's interesting, though, is that Snapchat notably didn't have that much international presence. We've been talking about this company all day because Carson Block's come on and said potentially this would be a short for him. And they have, 13% presence in Europe, 8% rest of the world. Are they outliers when they have less international presence but still can come to the market and IPO successfully?
Definitely early on their global expansion, but they fast followed with opening an office in London, which I thought was a great move. Overall, though, has been a good story. Lots of it in the news, but still a very strong performer. So I think you'll see companies like that have more potential try to catch up more quickly.
What's interesting is you're saying, look, go to Europe. This is really where you're seeing the statistics weigh out that their dominant revenue stream, internationally speaking, comes from Europe. Why not Asia? Why not the growth-orientated part of the world that we see there?
Yeah, Asia is an amazing market. It's vast, it's huge, and lots of opportunity, lots of big companies there. So we think Asia is a great destination. But what we found is that if you're a company that started in, say, North America, and you want to have your first kind of step to global expansion, Europe's really the best place to go. And it's a few factors. The first is just the similarity of customers, whether it's consumers for social kinds of businesses or it's enterprises for B2B companies. They're very similar to the ones you find in North America. And their buying behavior, the way they think about infrastructure, it's pretty easy to go to Europe from the US. You can then take the learnings from that, from the way you've landed and expanded, and then take that to Asia. But sometimes Asia is a little bit harder. I mean, if you look at a company like Evernote, which I think did a decent job, they had to set up separate infrastructure in Asia. They had to set up a joint venture. So from a infrastructure and business complexity, it's a little bit harder. Now, we've also seen companies that have tried to go to both geos at the same time, and sometimes they've succeeded and sometimes they've failed. And we see companies like Google that have not made it there yet.
And when you're talking to your portfolio companies, potentially on the eyeing up the IPO landscape and deciding to come to Europe, where are they looking to lock down? Because I'm here in London, it's one of the biggest tech hub in Europe, but there is a concern, there is Brexit, of course. Do you say, hey, go to Berlin, go to Amsterdam? Where's the key city they should really reside?
It really depends on how you think about your business. So for example, when we expanded at Dropbox, we had a great opportunity because we had a lot of customers in Europe. We wanted to support those customers, and customer support was really the key driver. So based on that, we actually went with Dublin as the landing spot. And now other companies may choose London because it's great for fintech, financial services, for enterprise companies, and really just a great talent hub. We see Berlin and Amsterdam as great destinations, and I think Paris will come up soon as well.
And I've got a great question coming from a viewer that's been sent in directly, and they're asking about valuations at the moment. I mean, we're looking at technology valuations on the S&P 500 being really at elevated levels, the highest spread versus the rest of the S&P 500 since 2008. We're like 24 times price to earnings. Does that mean this is a great time to be starting to IPO? Is that what you're telling portfolio companies, or are you more concerned?
We're pretty bullish on this window. I mean, if you look at just some of the recent outcomes, whether it's an Okta or Snap that we just talked about, you've seen huge pops right after these companies went public. And that's really a lot of pent-up consumer demand and generally demand for tech. We think tech's never been stronger, and it's going to continue to increase. So we're quite bullish on encouraging our companies to go out if they have everything that it takes. And obviously having a presence in Europe is a big part of that.
Well, we wish you well with all of that. The portfolio companies based in the US and indeed some of them in Europe get them IPOing here too as well. Index Ventures partner Ilya Fushman, thank you very much indeed for joining us. Now, still to come, the world's leading maker of drones is out with a new device that will take off from the palm of your hand. A look at the DJI Spark next. This is Bloomberg. Now, SurveyMonkey has just added a major hitter. Tennis champion Serena Williams, like what we did there, will join the board of the online polling provider, where she's expected to advocate for diversity at the company throughout Silicon Valley. Joining Williams will be Intuit CEO Brad Smith. Now, they replace HPE CEO Meg Whitman and Turbonomics Executive Chairman Bill Veit. Williams says she will use her role to foster a more inclusive environment in the technology industry. Now, of SurveyMonkey's 650 employees, minorities make up just 14% of staff. Meanwhile, the world's leading maker of drones is betting on a new unit so small that it fits in the palm of your hand. DJI just unveiled its smallest camera drone yet in New York. DJI is looking to win the broader consumer market. Bloomberg Technology's Selena Wang attended the event and took the new drone for a spin.
I'm here in New York City at Grand Central Terminal for the Chinese drone giant DJI's unveiling of its smallest and lightest drone yet. I have it right here in my hand. It actually weighs less than a can of soda, and it's only $499. With this drone, DJI is really hoping to step into an entirely new ballgame. It's hoping to reach the masses with this very easy-to-use drone. It actually takes off and flies directly from your hand. I'm here with Michael Perry, DJI's head of strategic partnerships, and in my hand I'm holding the Mavic, which was recently launched last fall, and the newest one, the Spark, from today. So this tiny little thing has a ton of technology, a lot of the same features actually as are in the Mavic and even your larger drones.
Right.
How did you get it so small?
A lot of work. So, over time, our first product, remember, was about this big, and it was just a flight controller, which is the brains, the chipset that's happening inside here. And over time, we've been able to bring it smaller and smaller, make it more energy efficient, but also more intelligent, adding new features like sensing obstacles and avoiding them in real time. So we've done a lot of work to shrink this down and still provide a powerful system that anybody can use.
Do you think this is going to drastically expand the total addressable market of DJI?
Yeah, so we think that when looking at the overall market for DJI, we see consumers have a few barriers. The first is price, and we feel like at $499, you have a lot of technology for $499. We also have ease of use. Can I use it? And everybody can move their hand around or tap buttons on their smartphone. You can use this system. And then finally, it's about relevance. How often am I going to use this? We've made this as easy as possible to get up in the air and tell great stories.
Okay, we are standing here in Grand Central Terminal.
That's
you mentioned
right.
New York for a reason. What does the U.S. market mean for DJI? How important is it moving forward as you grow this consumer segment?
The U.S. remains our largest market in the world. And what we see here is a lot of interest in drone technology specifically. Over 46% of the customers that we polled were interested in buying a drone this year. And so we feel like this system overcomes a lot of those barriers that allow them to actually get into the market and start flying.
Okay, let's talk about competition. The Chinese upstarts have flooded the market with cheaper drones.
Right.
GoPro obviously came out with the Karma last year. Where do you think this guy is going to stand?
So we want this drone to be people's first experience with the drone. And when you look at online reviews, when you actually try out the technology, consumers might be interested, but then they drop out because they feel like it's too hard to use. We've put a lot of intelligence in the system so that it can be simple, so that anybody can get it up in the air and have a reliable flight experience. And we found that, by having better technology, consumers have a lot more confidence and they're more willing to give it a shot.
So can you show me how it works?
Yeah, let's do it.
Yeah, let's do it. Oh, do I let go?
Oh.
Not yet?
Yep,
Okay.
there we go.
Oh, okay.
So now it's just hovering.
Okay. Oh,
Yep.
amazing. How do I bring it back?
So raise your arms and go like this. There you go.
And it's coming back.
And bring your hand to your chest. All right, now walk to it and put your hand underneath. Just like that. There you go.
Now, DJI is operating in a very competitive and niche space. The drone market is still very small, but it's expected to grow very quickly to more than $11 billion in revenue by 2020. Now, DJI is betting that with this tiny, lightweight drone, it can get the masses to all want to take a personal drone wherever they go. But time will only tell if DJI is really going to be able to reach the masses in the way that it hopes it will.
Very cool. That was Bloomberg's Selena Wang. Now that does it for this edition of Bloomberg Technology. On Thursday's show, Keith Raboy, partner at Khosla Ventures, will join us as guest host for the hour. And Bloomberg Technology is live streaming on Twitter. Do check us out. It's at Bloomberg Tech TV weekdays at 5 p.m. in New York, 2 p.m. San Francisco, 10 p.m. in London. That's all for now. This is Bloomberg.